If you
Get here.
okay, there we go. So we'll start in like a few minutes. We have lots to cover. I think you're going to find this extremely valuable today.
Okay.
Right. I have some latecomers. That's fine. Some. Hey guys, thanks for joining us. We'll start really soon. Okay. Just a few more minutes.
Good morning, everyone.
Yeah.
Wow. So we'll give it another minute. I have 9:59 right now on my side here, and then we'll get started with and I know that there's going to probably be more people kind of waiting in the lobby as we kind of proceed down this presentation here.
I don't know why it's asking for password.
I think you set it as 1, 2, 3, 4, 5, 6. That was on the invite right there.
Got it. Okay. Thanks for letting me know.
Right, no worries.
Put that on my thing. Okay, I think we should start with time being of the essence, right? Because we have lots of Wayman today, don't we?
Yes, we do.
Yeah. there's a lot of things happening. I guess you guys know from news and the what's happening in the economy. So there's a lot to learn. And I know a lot of people have questions about, is this a good time to buy? So we'll cover all that with you and make you understand what's happening. And then you decide if it's a good time to buy, right? Just give me 1 second. Okay, so let's start, guys. So I want to thank all of you for coming on to this webinar. We were going to do this as a seminar, but we decided that let's do it in a webinar format so you can do this from the comfort of your own home. So thank you for joining us. Today, we are going to cover a few things. Number one, I want to go over the stats with you just to show you what's happening in terms of inventory, in terms of the demand and how it's affecting the price in the marketplace. And unfortunately, I cannot cover all the areas, but what I'll do is I'll cover specifically just Surrey and condo and townhome market. And then if you want to learn more about Langley or Coquitlam or Burnaby, give us a call. Like, we would love to chit chat about real estate. We love doing that. So we can go over it with you one-on-one. Second thing I'm going to cover is the buying process, and show you from the time you meet us and you get your mortgage approved till the time we hand you the keys, what goes in between, and what are the costs involved, what you should be aware of, right? Because the last thing you want is surprises when you're closing and the lawyer says you have a $5,000 bill or $7,000 bill, and that should never happen. Okay, so once again, thank you for joining in. My name is Ravi Bindi. I'm a realtor with Royal LePage. I've been a realtor for 18 years now, helping buyers and sellers buy and sell real estate, I guess. And the main purpose of the way we work is I firmly believe in educating and guiding clients. I'm not here to sell you anything. You will tell me if you want to sell something or buy something, but my job is to equip you with so much knowledge that it's easy for you to decide what to do, right? And that's the format I work with as a realtor. You will never see me pressure you into buying anything. I'll educate you to the fullest. I'll suggest some things, and then it's up to you to take my suggestion, right? I'll take you to a point where the decision is easy to make, and you'll either say yes or no. All right. So we'll start with the stats. I want to show you what we get in terms of stats. It's really important for any home buyer or seller. So in this webinar, I will cater to home buyers, okay? Because this is our first time home buyers webinar, and I'll show you what to look for when you're looking at stats, okay? And now that we have met and I have your email address, we'll add you to our database so you get these monthly stats. We pay for them, and you will get them for free every month. And I would highly encourage you to get like addicted to it, like get used to looking at it every month when they get released, okay? So here we go. So I want to show you this, okay? Give me 1 second. All right, there we go. So this is what we get as realtors. Like, I subscribe to this, I pay like $50, $60 a month. But what these guys do, the company called SnapStats, is they take stats from the boards, the real estate boards that are generated, and then they make it in a readable format so you can understand and use these stats to your advantage, right? And I'll show you a couple of things what you should look for when reading these stats. So here it shows you for the month of, this stats are for the month of June. This shows you the city it's for, right? And if you scroll down on the header, you'll see that it says this stats is Surrey, June 2022, and it's for detached houses. So there's 2 pages per city. And what it does, it breaks it down per detached homes and condos and townhomes. So for our purposes, I'll just go over condo and townhomes, okay? So I scroll down and here we go, condo and townhomes for Surrey, right? So what these guys do, and I love this because they break it down per community. So if you're a newcomer and you say, hey, I want to buy in Surrey, you can actually look at all the neighborhoods that are here, what kind of inventory each neighborhood has, what kind of sales each neighborhood has, and do your research accordingly. Because if you see that like Fleetwood has a lot of inventory for townhome and condos, Central City has it, West Newton has it, Sullivan Station has it, you can actually look on the map where these areas are, drive through them, research schools, and then decide which area you should buy, right? So this I love. And for newcomers, this is the way to go. Look up these areas on Google Map and drive by them too, right? So here, what they do is they take monthly stats. They show you how much inventory came in that month. And then they show you how many sales we did that month, right? And they give you a sales ratio right here on the right side. Now these sales ratios at the peak were about 80–90% for all these sub areas. And look at it now. And the goal here for Bank of Canada is to drop this down under 10%. So we're still in a kind of a balanced market right now. The goal is to drop it down even more. So that's what we will see, that this will drop down even more. Sales won't happen as much, right? So this is what you want to observe. What is the sales ratio month over month? Like if you're thinking of buying in Fleetwood, you want to check 23% this month. How about next month? Is it 30% next month? Is it 40%? Because now you know market's moving up and you need to decide, do you want to buy now, right? Now, so this is based on community, okay? They take these numbers, total number of inventory right here, and the sales that happen. They take the same numbers right here on this side now. And what they do, and I'll zoom in, and what they do here, whoops, is they take the same numbers right down here, and they divide it into price band. So if you say, Ravi, I want a condo, a 2-bedroom, 2-bathroom between 500 to 700. Well, here's the price band. And this is what the sales ratios are. This is how much inventory is coming in. This is how much sales are happening. So this is quite high. And historically, when rates go up, condos start selling more because that's what people can afford, right? So you want to observe this too, like how much inventory is coming in? Is inventory dropping for that price band? Is sales picking up? So these are the kind of things you want to look for every month and compare month over month, okay? The next part, they take the same inventory and they break it down from studio to 1-bedroom, 2-bedroom, 3-bedroom, 4-bedroom. And if you say, Ravi, I want 2-bedroom. Well, there's 357 units out of 992 that were 2-bedroom. And out of these many sales, almost half or 45% was 2-bedrooms. So it shows that 2-bedrooms are still selling, and 30% sales ratio, which is quite high based on all the other areas and what things are selling for, right? So this ratio is quite high. So this is what it shows you, same inventory, same sales, and the sales ratio for number of bedrooms. Now, the next part goes over month variance. So it shows you how how things adjusted every month. So here you can see the price dropped from 640 to, the average price dropped from 640 to 590, about 8%, right? So this shows you that things are still selling for like close to asking price, and one has to learn how to do comparables. And there's deals to be picked up, but you just have to know how to do the analysis of that specific condo or house or townhome that you want to buy. And the person would have to know how to negotiate, right? So sometimes you can pick up good deals and even offer lower than 98%. Now, the next part shows you the market summary right here. So summarizes basically everything that we talked about on the top. And this part is the most interesting part for me as a realtor. So every month I look at this right here, and I want to see from 2021 June right here, okay? This is 13-month trend. So from 2021 June, it shows me the black line here is the average sale prices. The red line here is the amount of inventory that came in every month. And the blue line is how many sales we did in that respective month. So if you look at the supply, how the supply, when supply starts going down and demand starts moving up, guess what happens to the price? It's just basic economics, right? Supply goes down, demand goes up, prices start climbing, right? And guess what happened? Right around January, when Bank of Canada announced, hey, we're gonna hike rates, and the war started happening in February, and uncertainty started spreading. People started getting scared, and as rates started dropping, the demand dropped, right? Look at the demand, like 480 sales in March and then 298, right? And then inventory moved up, supply moved up here, demand's still lower than last year, right? And guess what's happening to the price? This line is moving down. The average prices are coming down, right? And what I look for when I look at every month is I will look for those lines, like, is the inventory actually dropping now? Is the demand increasing now, right? Did the price go up? So I know at that point, something's happening. And now I can use this information and use this information to decide if I want to buy, right? I use this information to show listing agents, look, prices are coming down. You need to take a lower offer, and here's the facts. And I use this specific page with my offer to present a case for a lower price offer, right? So this is how you can use stats in order to gain when you're buying a place. You need to start following this, and I'm glad that we met, because now every month you're going to get an email from us, and you can click on the stats, and you can look at like all of Lower Mainland stats, because now you know how to read this one page. You can read all the other pages yourself. All right. And if you ever have any questions, please do call us. All right. Do call me. Now, we want to do this as an interactive webinar. Okay. So, and I know I've talked to most of you, and you had a whole bunch of questions. I think we have a lot of questions about mortgages. So Wayman is going to talk about mortgages in a bit after I talk about the buying process. But before I move to the buying process, do you have any questions about the stats? Just unmute yourself and please fire away your questions if you have any questions that I can answer.
Hey, Ravi, can you hear me?
Yes, I can. Hi.
So I do have a question. So
Yes, sir.
you said the black line is like the average price, but is there any insight to tell whether this is like a 1-bedroom or like a 2-bedroom studio? Like what kind of home is this representing?
So it represents condos and townhomes, and it doesn't specifically represent like a 1-bedroom or a 2-bedroom or a 3-bedroom. It's just, it combines everything, and it does average prices for all of them. And there's a way, like if these guys did for 1 bedrooms, 2 bedrooms, 3 bedrooms, you can imagine how many pages there would be. But when we work with clients, we can actually do this ourselves for specific type of condo, right? Or type of townhome. So we do this for specific requests for clients. Yeah, so this is combined actually, but it gives you a good indication of what's happening, right? And look at the, like if I scroll up, look at the house prices, like from the peak of 1.8, it's coming down to 1.5, right? So this is fantastic for buyers. And so does that answer your question?
Yeah, thank you.
Okay, okay. And so what you want to look for is what is happening with the inventory. Will it drop? We don't know. Like in July, another stat will come out and another dot will come out. And is it going down? Is it going up? Did this go up? The demand go up? So as soon as we see the demand start going up, that's where you know we've almost hit the bottom. But to time it, it's really tough, right? And what we recommend is you can't time the bottom, but you can buy in two types of market, declining or inclining market. In a declining market, when you buy, you can actually negotiate, you can put in subjects, we can go back and forth in terms of price, we can make an offer, and if the seller doesn't accept, we can walk away and then come back after 2 weeks and say, hey, do you want to accept my offer now? No? Okay, I'll follow up with you next week. So you can apply these kind of strategies, negotiating strategies, right? In an inclining market, you can't do that. As soon as certainty comes in, because right now, just think like Bank of Canada there's too much uncertainty. Like we don't know when Bank of Canada is going to stop raising rates, and once that certainty comes in, that's when people start jumping back in and start buying again, right? So we want to look for, this, like, is the gap closing or widening, right? So that's it for stats. I want to go over the buying process now and some of the costs involved. So let me show you that. Just give me 1 second. Go. Okay, so if you look at this, okay, so the first part is where we meet today and we go over your needs. We do an in-depth analysis of your needs, and then we start looking for places for you based on your needs, right? Places that are on the market and places that are off the market too, because there's lots of places where one can look for places that are not on Rio.ca or Realtor.ca or any websites or MLS. There's lots of properties that get sold off market. So we search both database and try to look for properties for you. Now, once we understand your needs, we want you to talk to a mortgage rep and get your mortgage approval, right? That's one of the crucial things to find out. If you get approved, what amount do you get approved for? And Wayman is going to talk about this today and talk how you get approved, okay? Pre-approved and approved. Once Wayman calls me back and says, hey, Ravi, this client got approved for this much. What we do is based on that number, we start booking tours for you, right? We start looking for properties that are on MLS and off MLS, and we start booking tours for you and take you for a tour of maybe 5 to 10 properties within a day. And we book those tours, we go pick up the keys, we set appointments. All you have to do is drive with us. We print out feature sheets for you, do basic analysis to show you how each property rates. And now you can use this information and easily decide, okay, I like property number 2. Is this a good deal, right? So once we book that tour for you and we start showing you properties, you may say, hey, based on what we saw today, I like property number 7 and I want to make an offer on it, right? So what does that mean? So when you make an offer, okay, there's 3 parts to an offer. Part number 1 is price. Part number 2 is dates. And dates, there's 3 dates: completion date, possession date, adjustment date. Completion date is when you become an owner on paper. Possession date is when you get the keys. And adjustment date is to adjust like strata fees, property taxes. If you buy halfway through the month or halfway through the year, those things need to be adjusted. So those are these 3 dates. And then the last thing is in the contract is subjects. So we're in a market right now where you're lucky, because if you bought a home last year, you would hear people making no subject offer, which is so risky. And we don't recommend this, right? And there's times where you may decide based on information we have that you want to go with it. Then we suggest, we apply certain strategies to it and go for that offer. But right now you can put subjects, which is great. So the way it works is when you make an offer, here are a few points to remember, okay? This part right here is really important. So when you make an offer, we negotiate price. So let's say if a person wants $950, I would show them the news articles that I have. I would show them stats I have and say, well, your home's not worth $950. It's worth, let's say, it's worth $875. And I would have to base it based on facts and arguments. And I would write up almost like a short report with my offer saying, hey, this is how we concluded to this number. We didn't pull a number out of thin air. We actually did our research, and here's our research. And based on this is how much your home is worth. And if you don't want to take it, that's fine. We'll follow up with you next week. And there's a couple of strategies to apply. Now, let's say if that person says, no, I don't want $875, I want $925. And we said $920, and they agree. The next thing we negotiate is dates, because that person who's selling may have to move out by a certain time. And in your situation, you may say, hey, Ravi, I can move out next month. I can move out 3 months from now, 4 months from now. And if they need more time, give them more time. It's okay. But let's negotiate the price. So we would go back and say, okay, you want 4 months. Okay, you can have 4 months, but keep in mind, we're paying so much for rent, and here are our expenses. We want that price reduction. Now we don't want this place at $920. We want this place at $910. And here's why. If you want the dates, you can have the dates, but we want the price. If you want the price, then you can't have the dates. You can have one or the other. So anyways, we negotiate and let's say agree on price, $910, the dates they want. Then we say, okay, we will agree to pay you this price. We'll agree to complete on this deal on this date, subject to my financing going through, subject to the inspection of your home coming out clean, subject to me reading the disclosure statement and making sure everything's okay. Property disclosure statement, just so you know, it's a questionnaire a seller must fill out truthfully. And if they lie, they can be held liable. And that we include, we make sure we incorporate that in as part of your contract, okay? Title. Usually, many realtors will say, well, here's the title copy. Please go and get it reviewed by a lawyer. And then if the lawyer says the title is fine, then let's move forward. Now, we have built relationships over 18 years of being in real estate, where we get a lawyer to review the title for you. And they give us a summary of the title, showing us which charges means what. And they they define each charge. They pull out each charge, summarize it for us. This way, you don't have to spend that money, right? So we do that for you and give you a summary. And if I have any inquiries, I would call the lawyer and say, look, charge number 4, I'm not sure about. Can you explain that to me, right? So they would, and then we would move forward or not move forward. Insurance is a huge factor, especially with about 2-3 years ago, all these insurance companies upped the insurance. So when you were buying a strata property, you want to make sure you look at their water deductible. You want to make sure that when is their renewal coming up for insurance, and in between that time, did they have any damages for water in that building? Because let's say you are completing in August, you make an offer on July 7th, but you're completing in August 18th, and the AGM happens to be on 3rd. The insurance company may come back and say, well, we're not going to insure this building because we deem this as a problem building. Now you cannot get a mortgage at the end of completion. So Wayman, maybe you can touch on this. Like, is that still true? Because that was true about 2 years ago as well, right? When we had these.
Correct. Yes. So that is going to be a key aspect too, as well as that there's many factors when banks are underwriting for mortgages. So we have to be cautious is that when we lend, when we look at it, we do have to do an appraisal. It's done by a third party. And if there's any latent defects on the property, there's a high chance that the banks or any financial institute will not lend due to that property. So those are things that whenever it's something that as clients, I kind of relate to clients, is that you have to be really cautious about your approach. And that's really important, stressing the importance right there of having someone as qualified, such as Ravi, being your realtor, because they will do the homework for you. They will have a lot of insight on the properties themselves.
Yeah. So thanks, Wayman, for this. So in 18 years, I've been in probably about 5 strata councils. So I've sat in the council as an owner and kind of managed that building. And what I've learned from that is how we communicate things on the minutes, how we communicate things on paper. It's really important to understand that side of how things work. And when I read through the strata docs, I can read in between lines. I can understand what they're saying because I've been on the other side. I have actually been on a council where we have fixed problems for certain buildings and got that building up and running, right? So when I read through the strata docs for you, like I'm looking for problems, and many of my clients will tell you that they have liked something, and we are at that initial stage of reviewing documents. And I would tell them, look, I feel uncomfortable with this building. I don't think you should move on. Let's not remove subjects, right? And they're a bit disappointed, but it's for their benefit, because I know that after reading through maybe like a depreciation report, that there's lots of special levies coming. And I don't want that to happen to anyone. So once I read through the documents, once you read through the documents, I will suggest things, okay? So going back to this. So when you make an offer, there's price, date, subjects. Subjects mean you're telling the seller, look, I'll buy this place at this price on this date, subject to all these things, all my due diligence I want to do, right? So insurance was the last thing we talked about. And then the strata docs. You need to know what strata docs to order. And once you order them, how do you read through them, right? How do you look at strata plan and figure out if the square footage of the place you're buying is same square footage in the strata plan? Because a lot of these measuring companies are measuring places wrong, and we're catching these like upfront and challenging these upfront, where we're saying, look, you're about 150 square foot less. You're showing 150 square foot more, which is not true. So it's really important to know these things and how to read these things. So when we work, we make sure that we read through these things for you. And if there's anything that raises red flags, we bring it up to your attention right away, right? And the sellers and the listing agent's attention. Now, for example, here on July 7th, you decided, okay, let's make an offer, Ravi. We get the offer accepted. Offer date, July 10th. So previously, last year, the way it would work is July 7th, they would do showings. July 10th, they would take offers. And the listing agents would try to generate multiple offers because of this, right? And if you liked this place, you would make your offer, and if there were 5, 6 offers, now you're in multiple offer situation. Now, this is not the case, okay? You look at the place on July 7th, you can make an offer on July 7th. And once you make an offer, you can say that I want due diligence period. I want about 5 to 7 days to decide if I want to buy this place based on my due diligence period, right? So you do all this, and let's say on July 11th, you decide, Ravi, do you know what? The strata docs are not good, as you said. I don't want to buy this place. You can back out. And what we do is we sign a piece of paper, which is a release form, which releases the seller from our contractual obligation. And now they can go ahead and sell it to somebody else, right? Let's say on July 7th, you look at this place, you make an offer on July 7th, it gets accepted. On July 8th, somebody comes in and loves this place and tells Mr. Seller, look, I will pay you, you're getting an offer for 920, I'll pay you $1 million. The seller cannot accept that offer because they have already accepted your offer, and you are doing your due diligence between July 7th and July 12th, which means in between time, they cannot take another offer. But let's say you look at this on July 7th, and then on July 9th, you want to come back and think about it and make an offer. But on July 8th, this person went in. Now they can go in and make an offer, and now you would have to wait. So advice to clients is that if you like something, we should make an offer, okay? Now, when you make an offer, these are the things we agree on. On July 12th, if you say, Ravi, okay, inspection came out fine, my financing is great, all the documents are fantastic, I want to move forward. On July 12th is when you pay a deposit. So this is very important to remember, because a lot of people think when they make an offer, they have to come up with the money, with their deposit money. You do not. In the contract, we will write that the deposit is due at the time of subject removal. So that's when you pay deposit. So on July 12th, let's say everything goes fine, and you say, Ravi, let's move forward. We remove subjects. We sign off on a whole bunch of paperwork, and you give deposit. And on that day, on July 12th, once you remove subjects, that means we're moving forward. There's no turning back. Deposit is part of your down payment. So for example, if you have 100,000 down and you're putting 25,000 as your deposit, the rest you have to bring at completion, okay? So I'll give you an example here. So going back to subject removal, once you remove subjects, you give a deposit, you sign off on all this paperwork. The deposit, you should always make out to the brokerage's trust account, okay? No personal names. It should be Royal, for example, I work for Royal LePage. So it should be Royal LePage West Realty and Trust. So what the brokerage does is they will take that money and put it into their trust account and forward it to your notary or a lawyer closer towards completion. So that's how deposit is handled, okay? Once you remove subjects though, there's a lot of things now you have to do. You have to find a law firm or a notary public that will do the conveyancing work, like the closing work. You have to inform like utility companies, TELUS, BC Hydro, Fortis Gas, let them know that, hey, you're moving on this date and to start your billing on this date. Insurance is really critical. I have seen, actually a family member had his townhome burned down, and good thing they had insurance because the insurance covered everything. But imagine if you didn't have insurance, you'd be in trouble. So it's really important to get that home insurance, okay? And the home insurance, you should always get, not for possession date, because on paper, you become the owner on completion date. So you should have the insurance starting on completion date, okay? And we tell you this when we work together, we give you a list of things to do after you remove subjects. So now, okay, you gave us the law firm that you're working with, you've called all these people, you've connected with the mover, you've got your insurance. Now what happens? So if your completion date is on August 16th, on August 14th, your lawyer will call you and say, okay, Mr. Buyer, come in and sign all your paperwork because you're completing, and bring this amount with you. So you have put $25,000 as deposit. You've told your mortgage rep that you're going to put $100,000. So the $75,000, can you bring that with you? So they'll ask you to bring that draft with you, but they'll also ask you for the legal fees, which is the closing costs, which is about $1,500. Prorated taxes. So depending on what time of the year you complete and depending on what municipality you buy in, the property tax will vary, right? Same thing with strata fees. Title registration is about $200, $250. Ordering of documents is about $250. Property transfer tax is 1% on first 200,000 and 2% on the remaining balance. This amount does not include in your mortgage. You have to come up with that amount. If you're buying anything under 500 and you're a first-time buyer moving into this place, you don't pay property transfer tax. If you are a first-time buyer buying a place that is brand new, like a pre-sale, up to 750, you don't pay property transfer tax, right? Anything over that, there's a sliding scale for another 50 grand. And then anything over that, you pay full amount, okay? And the last thing is the CMHC costs and the GST. If you're buying a new place, 5% GST applies. That can be added to your mortgage. And the way it works for mortgages in Canada is if you put less than 20% down, you're considered a high ratio mortgage. And if you put like 10% down, you will have to pay 4% CMHC fee, or if you put 15% down, you may have to pay 3.2% CMHC fee. So CMHC means Canada Mortgage and CMHC means Canada Mortgage Housing Corporation. And what this government body does is ensures the banks, if you default, they will pay them off, okay? And there's a cost to it. So this is how this works. Once you bring these amounts in, plus your down payment, the notary will get you to sign on this date. On completion date, you don't have to physically be there because you have signed already. They will process all that paperwork on the 16th. And once they process all the paperwork, they will call you and say, well, okay, we have registered the mortgage under your name. I've registered the property under your name and transferred the money to the sellers. Now, congrats, you're the new owner. Or they may say, hey, we had some problems with the title. We're investigating. It may take another day. And that's what they might do. And then once they complete, then we get the registration number. And then on August 18th, for example, you move in. We meet there, we give you the keys, we walk through the place, making sure everything's there, and you move in. And that day, you have 24 hours to let us know. Actually, the less hours, the better. I would say about 6 hours to 12 hours to let us know if there's something missing or not working that was supposed to work. So let us know at that time, and we would walk through with you and just make sure everything's there that's supposed to be there, okay? So basically, this is the buying process. As you can see, it's quite lengthy, and I know it's like getting information from a fire hose. But if you have any questions, like I said, you guys have my number. You can call me anytime. But if you have any questions right now, please do ask. Any questions about the buying process?
Hey Ravi, I have some questions actually. So
Yes.
I saw that they've actually like come January 1st, I think they're introducing in BC like a mandatory 3-day
Cooling
home
off.
fires protection.
Yes.
How does that impact the process? What what was it before? How does that help? Can you shed some light on that?
For sure. Great question. So right now, it won't affect us because as buyers, because it only affects us when the multiple offer situation comes in. And right now, we won't see that, right? Right now, if you make an offer, you can put all these subjects, and never mind 5 days, I've put 2 weeks, 2.5 weeks for subject removal, right? So the government is giving you a 3-day cooling off period where you can make an offer and back out of an offer. And I think there's some fees involved as well. But right now, you can put subjects more than 3 days. So the cooling off period will only help us as buyers when there's multiple offers, because the government doesn't want you to go subject free anymore. The government wants you to put subject to inspection. It's so crucial that you put that, right? Subject to financing and have that due diligence period so you can do all that. But right now, it won't affect you much.
Okay.
Yeah.
And then
Now,
yeah, you can finish what you were saying.
sorry, go ahead. Yeah.
When you talk about removing subjects, does that just mean that you're like taking off and you're agreeing that, okay, I went through financing, I went through inspection? What does that actually mean?
So when we draft a contract, we put the price, the dates, and then we in a addendum, like in a separate page, we put subject to buyer getting a satisfactory mortgage by, let's say, August 3rd. And this subject is to the benefit of the buyer. And what we have to do on August 3rd is we have to draft another piece of paper saying that to remove all subjects, subject to inspection, subject to financing, subject to property disclosure statement, right? So we will remove all that subjects. And that's how it's done. It's done just through paperwork signing. That's all.
All right, thank you.
Yeah. And we had a question here online. Does CMHC mortgage also get added to your mortgage? Yes, it does. So it will get added to your mortgage. Now, I did an example up here, and this is like our buyer consultation meeting. When we sit with buyers, we spend about 1.5 to 2 hours basically educating all this. And then we do an in-depth questionnaire. So in this first-time buyer seminar, we've already done like almost an hour and a half worth of stuff. And the only thing that's left is probably the questionnaire. So I would highly encourage you guys to call us and book one of those sessions, and it'll take like 15 minutes to half an hour. And this way we go to work for you. All right. Now, here's an example of how much costs you would incur when buying a place. Like if you are buying something 900,000 and putting 75,000 down, this is how much CMHC fee you would pay, right? And this gets added to your mortgage. 5% on top of 900,000, which is 45,000, will also get added to your mortgage. The transfer tax will not. You have to pay for it. So you have to calculate, when you calculate your down payment, 100,000, you have to think of this amount as well, okay? Lawyer fees is generally about 1,500. Inspection costs is about 650. Appraisal for mortgages is about 350, I think. And Wayman can talk about that. And Wayman doesn't charge any fees to clients, and Wayman will talk about this as well. So this is my part, and this is how the buying process works. All right. I know lots of you have questions about mortgage, so I would like to introduce you to Wayman, who's going to take over from here, and I'll stop sharing the screen. And Wayman will talk about how mortgages work for first-time buyers, and he will kind of give you insights. Now, Wayman and I have known each other for about a year or so, and in my 18 years of real estate, like I've gone through many mortgage reps, many mortgage brokers, and I have to say, Wayman came across as a person very knowledgeable, very intelligent. He knows his products really well, because there's lots of different mortgage products out there that we need to find out what your needs are, and then based on your needs, recommend the right mortgage product for you. So he's awesome at doing that. And he's also very, he follows the economy quite well. So me and him, whenever we get together, we have a really good chats about like what's happening in the economy. And with that, I want to introduce Wayman to you. Wayman, please take over. Thank you so much for joining us today. Oh, can't hear you. Can you guys?
I guess I was on mute. I apologize.
Oh, there we go.
Talking to myself, but can everyone hear me now? Or
yes.
Yes, excellent. Thank you. So no, thank you, Ravi, for the invite. And I know that mortgage is along with purchasing a home is a really hot topic that everyone really wants to know more about. What is the timing? What is the cadence in the process in itself? So overall, there's a lot to talk about for mortgages. And really, when I engage clients along with Ravi too as well in terms of the process, it's really about identifying what your needs are and really kind of really understanding that what is the hope and what is the reality of the situation too. And I'm very direct in that manner too as well, same as Ravi, and that because we want to give you the best advice for you to decide upon for you and your family, right? So there's a lot to talk about. I know that folks on this call may have a lot of questions too as well. So without further ado, kind of going through this process here. So buying your first home, Ravi kind of touched on it. He kind of talked about the processes here. Same thing with on the buying process, but also for in the mortgage side, there's also processes as well. And just can everyone see my screen that I'm sharing right now?
Yeah.
Yeah, excellent, wonderful. Okay, so we all, not only in Canada, but across in everywhere in the world, it's one of our biggest dreams is to really own our own home, like, our dream home, our first home, right? And going through that process right there, there's many pre-steps that we really want to understand and be ready for and actually go through that. It's not like simply where you just wake up and say, hey, you know what, I'm just going to go get a mortgage today. And then once I get approved, I'm going to go in the afternoon, go and put in an offer and get that closed. It's not that simple. I wish it was. And hopefully it was that simple in the near future, but we don't see it that way. And there is a lot of steps to prepare yourself to be getting to that step of getting actually approved. And that's one of the key things right here. So knowing the basics. So when we kind of when I talk to clients and really kind of engage them, there's, 6 factors that we really kind of go over to kind of help prep for that. And as I'm kind of going through all these are things that you probably want to have a good takeaway too as well. Or if you want to have future kind of one-on-one meetings where I can actually do a little bit more deep dive into how some of these kind of factors can help along with that mortgage process, right? So number 1, income and affordability. So that's where, the down payment, because we got to, just as Ravi talked about, you're not going to get 100% mortgage loan to value, meaning that the bank or financial institute is going to lend you you buy a $500,000 property, you're going to get a mortgage for $500,000 property. It doesn't unfortunately work that way, because banks, there's the risk tolerance to whenever you lend money, right? Not only in any kind of situation, but for even when you're buying cars, something as simple as buying a car or getting a credit card, there's always factors of risk, and the risk of not being able to fulfill that obligation of paying for that monthly payments right there. So income and affordability. So in Canada, when you're going in and say, I need a mortgage, it's really primarily based upon your income and your affordability. So doing that kind of calculation and being able to identify how much have you been able to save for as part of your down payment to be part of that affordability. So it can be as low as 5% down. But as Ravi has touched on, is that with any kind of down payment that is less than 20% is now deemed as a high ratio mortgage. And that's mandated by the federal government to ensure that anything that has less than 20% down, that it has to be insured to protect against potential default of the clients not being able to fulfill that process right there of paying their monthly mortgages. That's why, if people recall, in 2008, Canada was pretty resilient when the subprime market in the U.S. pretty much collapsed, and that's where something where we don't want to see that same thing happening up here. So with income right there, about we're talking about what happened with the rates increasing right now. So prior to the rate increase, there was what we call the Bank of Canada mortgage qualifying rates. So you normally, for someone making about 100,000, their mortgage affordability was about a little bit over 500,000 right now. Now with the new mortgage qualifying rates on their income, that's something that has dropped to about 450. So you can see there's been a decrease just because of the rates going up. So we'll talk more about how that kind of affects you as we're kind of moving along here. So the other key question that some people also have is also talking about gifted down payment. That's a question that comes up a lot too as well. So with gifted down payment, it means that you are allowed, for your primary residence being your first home, that anyone from your immediate family, so mom, dad, brother, sister, if you're old enough, your kids can actually gift you, meaning that there is in no terms any kind of expectation of you needing to repay that money back to your family members. And it has to be an immediate family member. It cannot be your friends. It cannot be, some unknown stranger, right? Because otherwise I can say, hey, Donald Trump's my friend. That's why I got a deposit of X amount of dollars. And that's why it has to remain within the family. And you can actually utilize that as part of your down payment.
So Wayman, I have a question about that.
Sure.
Now, let's say if somebody from India, like my relative, my dad, for example, is sending me money, right? And it's coming from his account into my account. Now, is there a time frame where it has to sit in my account, or is there no time frame?
Well, it obviously definitely has to come at least 10 to 15 days prior to funding. There is no timeline as to how long it has to sit within, because we need to be able to show proof that funds actually came from your parent or your father in India. Okay. As long as there's a bank statement that comes from your dad that says, hey, this is my dad. This is my account under my name. This was the originating source, and it's able to show that, then most of the times that's something that the banks will accept because it's coming from overseas. So,
Awesome. Okay, yeah. Good.
Okay, so kind of moving on. So I guess for the sake of time, I may kind of speed up a little bit. I do apologize, but for all of these things, I just want to be high overview going through this. If you want to have more in-depth or you have more questions, definitely Ravi and I are available to kind of stay on beyond the 1 hour time frame here and answer a lot more questions that you may have in terms of of mortgages or even just the buying process itself too. So employment history. One of these cautions right here is that when you're thinking about getting a mortgage, also have to understand is that because we at the bank, when we underwrite, we need to understand that there has to be some sort of stability with your occupation. So if you just switched careers, there is most likely a chance where you are going to be still under a certain kind of probation period. Now, when you are having that probation period, that means that the banks will not accept your application for mortgage or your income at that point in time. You have to be through your probation, and that you can actually have a letter of employment that actually shows that you are now a full-time or a permanent employee of that company. So be cautious of that. Take into mind that when you do plan on a career switch, that may affect or have an impact on your mortgage application itself. Okay. The other thing too, as well, is also be cautious about the frequent career switches and lows in between careers, right? So as long as there's proper explanation as to why, you know, you're doing a vertical move versus a lateral move, those are kind of obvious positive notes in a career trajectory for yourself. So those are things that you want to take into consideration as well. Debt or credit history, right? When we do it's credit score and beacon score in Canada is critical to you getting approved on a mortgage. So ensure some of the habits that you want to do is make sure that you're not late on your payments. One day late is still late, and that will still be reflected on your credit scores. And that has a huge factor or impact on potentially going from being approved or being on borderline. And those are things where the importance of credit scores is the fact that it draws a great historical data or statistics. For those of you who like numbers and crunching numbers, it just kind of shows the pattern of behavior of the individual that's applying for the mortgage. So banks really take a lot of put a lot of weight into when we look into the credit score and credit history. So key thing here, pay your bills on time. Do not try to overstretch yourself. Do not try to do like 10 different credit checks because then it's kind of deemed as a credit seeker. And those are what you do not want to be identified as part of right there. Right. And coming into it, savings. Now, this is where, you know, Robbie is an expert in the home buying process right there. But in savings right here, you know, just being able to save money in your checking and savings account is one thing. But being as a first-time home buyer, you're missing out potentially on a very excellent program that the federal government has instilled. And that's being able to pull out RRSP up to $35,000 and being able to utilize as part of that as your down payment. So that's a great program to have. And that's where you want to be able to leverage, you know, financial advisors within the CIBC. You know, I work really well with like Lynette at the Guildford branch, you know, Mandy, I got Lulu at the Hastings and Penticton branch too as well. And those are where, with having that kind of support to be able to identify where you can maximize the benefits that you're entitled to as a first-time home buyer to your home purchase. And now being able to have that as a potential tax write-down on your when you file your taxes for that year when you do make your home purchase right there. And those are things that we can definitely discuss and kind of go into more details of in another meeting or even after this presentation here too as well. But one of the key things is you can't just come in and say, hey, I'm going to start an RRSP today, put in some money, and then the next day say, hey, I'm going to make a home purchase now, and I'm going to pull it out. There is a certain minimum time frame that you need to have that money kind of invested in some of these vehicles right there. And you also have to have your advisors, financial advisors, to really kind of tell you which RRSPs that you can use, because LIRAs, they're locked in. You can't pull them out. And those are where it's a danger, where you put it into more certain these kind of vehicles. It's an RSP, but it's locked, and you can't you pull it out in the time frame that you need to make your as part of your down payment right there.
So that's a great point you make, because we recommend our clients also to put about, like, per person, put 35,000 into RRSPs, wait 3 months, and then withdraw it and use it for first-time home buying, right?
Correct.
So
Yes. And
awesome.
that's the power of leveraging and having people that have been in the industry so long, just like yourself, Robbie, and myself, and also having that team to help support. And that's
Yes,
why doing this, painting this financial picture, you want to do it a little bit earlier and starting the preparation work versus
yes.
now doing on a very ad hoc, very short term kind of turnaround expectations right there. So,
And guys, there's so much we can cover in 1 hour. Like these are like highlights, and there's so much you still need to know and learn. And honestly, we both are in that same philosophy mindset where we educate and guide. Like we haven't even touched into like tax credits, grants, like how do you use life insurance products to gain financially? How do you use Smith maneuver to save on taxes? Like there's so much to learn. And um, yeah, I'll let you kind of wind up, and then we'll kind of invite everyone to a couple of things.
sure, of course. Thank you. Thank you, Robbie. So those are things right there. So you want to be able to actually talk about, Robbie talked about the insurance, and also the fact that we have not only just only home insurance, but there's other insurance that you also want to touch on too. And you want to take into life events too, right? Kind of go into the fact that maybe you have a baby on the way, you have increased expenses. Those are things that will going to be layered into your financial picture as we kind of move along here. All right. So there's a lot of insurance, and these are things that each of these can take an hour to actually talk about. Title insurance, mortgage default insurance, what Ravi kind of talked about, property insurance, CIBC mortgage and creditor insurance itself. Those are things that what happens if you have disruption in your income, what happens then? These are programs that can help protect you and your family from the unexpected. So that's really key right there, right? Talking about additional costs, Ravi already talked about that. I'm not going to go into a lot of details into those, but these are things where there are closing costs. And from my standpoint right there, I usually kind of give a rough figure. Whatever your purchase price is, take about 1.5% of that, and utilize that as a basis for closing costs on top of your purchase price that you're planning on right there. Okay. So getting started, these are things where programs that as a first-time home buyers, you have a lot of eligibility to do. You got the home buyers plan, you got the first-time home buyers tax credit, which is now currently at $500 that you can get, but they're proposing to get it up to $1,500. And this is the first-time home buyer incentive, where you have 5% down. Well, guess what? The government will also be able to have ability to put in 5% down too, with certain criteria in place. And they also can go up to 10%. Now, what that means is that now you're now selling the government, giving them a 5% or 10% equity stake in your property, so that when you do repay it within the next 25 years, or when you sell, whichever comes first, they will then take 5% of that property value increase, or 10%. So those are things that we can definitely talk about a little bit more as we kind of get more in depth with these on a more of a one-on-one session right there. So
Yes.
moving on, mortgage types, high ratio and conventional. Conventional means that you need to have at least 20% down. And one of the key things here is that when we're doing a mortgage qualifying rate that we're talking about here, this is where, remember I talked about liability? Well, guess what? If you originally making $100,000 income annually, and you're qualified for about $500,000 for a mortgage, and then you say, hey, you know what? I just got a new job. I'm going to get a car. That car is costing you $500 a month. You know what that $500 a month also cost you? $100,000 in a mortgage affordability. So you were originally qualified for about over 500, maybe 525, 525,000. Now you're only qualified for 425 because of that $500 car payment. So those are things that when we do the preparation as prior to getting a mortgage application, that's going to be a big key to helping you move along and getting a successful mortgage application and getting a successful home purchase for yourself. I'm not going to go into the different rates just for the time concerns right there, but we do have fixed and variable right there. But here, allow me just a few minutes here to really kind of talk on this. But we can see that amortization, right? When we look at it here, longer amortization means lower payments overall, but higher overall, lower payments monthly, but higher overall cost. Shorter amortization, higher payments, but you can pay off the mortgage sooner. Now, that, I want you to take that definition that you normally hear a lot of times with amortization, and please throw that out the window, because we're not in the United States.
Yeah.
If you were to do this in a straight line, that will definitely apply. If you are in the United States, you are, when you do it, get a mortgage, it's 25 years, done. You don't renegotiate. What I want you to key on here, everyone here, is you see that term right there, that very short window that says term. In Canada, even though you get a 30-year amortization, which means now versus 25-year, that means that your monthly payments are lower versus a 25 years, if you can qualify for a 30-year, plus the fact that you increase cash flow. But I can guarantee you, during the next 4 or 5 years, that term, you can see there, you're going to renew, you're going to either refinance, or you're going to probably sell the property. So people don't get too caught up with amortization over the time, or how long your P&I is, because that's going to change. I will guarantee you that at the end of the 25-year or 30-year, that you will be at, most likely at the Bank of Canada statistical average right there.
Awesome.
Because you're going to renew, refinance, reamortize 6 to 7 times at least throughout that lifespan in Canada. Okay. So potential pitfalls. So these are things here where I want to really kind of highlight and recommend to clients to kind of adhere to and listen to. Don't get too caught up on the rates, because everyone say, hey, Wayman, oh, the rates are too high. You know what? I'm going to wait. I'm going to wait to buy a home now. Well, guess what? What happened 4, 5, 6 months ago when the rates were really low? Each property probably had like 10, 15 offers on it. People were paying $50,000, $100,000, $200,000 over the asking price. But if you had a chance now, the rates are high, yes. But if you had a choice now to save yourself $50,000, $100,000 on that same purchase and take a higher interest rate, would you rather do that or pay a low rate and overpay by 50 or 100,000? Those are key takeaways that you want to kind of look into, and we can definitely discuss more too as well. The other thing too is,
because
let the experts. Yeah.
Sorry, Wayman, you're right. Because when you do the math, you calculate if you were to pay higher rate for next 2 years based on, and then compare it to the savings that you could save when you make an offer, you would see right away it doesn't make sense to wait. Like, you should be buying now, right? Even if you have, even if the rates went up to like I've paid in a couple of properties, I've paid as high as 8%. And I know the pain of paying 8%, but it was an investment property. And I managed to actually save money on taxes because all that was tax write-off. So it kind of evened out at the end of the day, right? So I think once you put things on Excel and start looking at numbers, it should make sense to you. And that's where we come in and help you understand all this, right? So go ahead, Wayne. Yeah,
wonderful. Thank you, Robbie. There's only a few more slides here to go. Thank you for everyone's patience here. But the other pitfall too as well that we want to avoid is let the experts be the experts in their field. And make sure that, and just take the analogy of, if you have, something that you need to, for health reasons, and you know that you need something in your brain that you need to have looked at, will you go to a brain surgeon, or will you go to a general practitioner? Obviously, you're going to go to that expert that's had the 20 years experience, and have done multiple operations on people's and patients in terms of the brain and removing tumors from it, versus a general practitioner. Same thing here. This is where you want to have a solicitor, right? We always kind of say, oh, how much is the solicitor going to cost? How much is, when we look at the costing, but solicitor is going to be a big key, because they're going to be the ones to protect you and your assets in your family, because they will do the due diligence along with Robbie. They will be the ones who kind of check to make sure, is there any liens? Is there any kind of on the property itself, if there's any kind of deficiencies within the title search itself, they will be the ones who protect you. So why would you want to skimp on an expert that is going to be certified to do that for you? On the realtor side, look at Robbie. Go check his Google reviews online. See what they say about him. See what the type of results and the satisfaction that being able to give. And you want to have someone, in that's capable to take care of your needs, identify your needs, understand your needs, and be able to achieving your goals, the common goals with you. So why would you not want to have someone that has that expertise, that kind of has that trust, and is looking out for your best interests, right? Those are key things. Let the experts be the experts. Mortgage advisors, there's a lot of mortgage advisors out there. True, right there, right? Matt, Robbie touched on it right there. I don't have mortgage fees right there, right? Those are, at the end of the day, is that you want to have someone that's going to be truthful and be able to give you that actual factual financial picture for you, and also being able to go for bat for you, right? When there's certain kind of exceptions that need to be made that on your behalf, because we've kind of built that rapport and understand your situation, that's going to be a big key to help fighting that fight to kind of get that mortgage approved, because you know what, we're over some of the debt ratios, we have some certain kind of irregularities that we need to clarify and to kind of reaffirm that you as a client is going to be more than capable of fulfilling that loan agreement right there. So those are key things. Investment advisors, right? At CIBC, working with people like Lynette, like Lulu and Mandeep, people I work really well with at the various CIBC branches. Those are going to be key to giving you that support in terms of the financial advice for RSPs, GIC, et cetera, and how to prepare as we kind of go down this mortgage process right here. All right. So how can CIBC help you in wrapping up, simplifying the process for you, really simplifying the process for you. And in the case here, looking at various options. So some of you maybe on the call are still awaiting your PR, permanent residency, something like that, or maybe students. We have various mortgage programs for you, such as account openings at the branch level, student programs, specialized banking services, mortgage programs for newcomers to Canada. We also have other programs such as mortgage options, where only at CIBC, if I'm unable to get you the bank rates with a mortgage, I have a team that's called mortgage option specialists that will give us or help us be able to obtain mortgage loans where they scour B lenders, alternative lenders, everything to get you that loan and be able to close on that property in time, so that within 1 year, it's still under CIBC. These folks that support us, they're still at work with CIBC. After 1 year, they're going to revisit that same mortgage and be able to say, can we put you back into a standard bank rate and a bank mortgage itself? So that's powerful right there, right? So feel free to contact me and Ravi to arrange a no obligation consultation to help achieve your home buying goals, right? As a CIBC mortgage advisor, I can conduct mortgages on any property anywhere in Canada. So and Ravi has accessibility anywhere, anytime. So don't think of me or Ravi as working only 9 to 5. It's anytime, weekends, Saturdays, Sundays, morning and evenings right there. Come visit us at the Guildford branch, Penticton and Hastings, or any CIBC branch, and together we can help make your dream of a home ownership a financial reality right there, right? So thank you for everyone's patience. We'll open up to the floor if there's anyone that has any kind of quick questions. If not, we'll definitely reach out. Ravi and I will reach out to you on a one-on-one, just kind of schedule and kind of touch base with you to see if you may have more of a personal question that you want to kind of go over in terms of your home buying or your mortgage process. Thank you.
Hey, this is Rico. I have a question.
Sure. Yes. Hi. Here we go.
Yeah, I have like just this one burning question. So you said closing costs are about you can approximate it as like 1.5% of the purchase price. That's in addition to the fees that Ravi was showing us, like for instance with the property tax. So, or is that like combined? I'm just trying to clarify that. So do I need,
Yes, thank you. That's a really good question. And that is, yes, that is on top. That is something that, you know, Ravi's responsibility, also my responsibility to explain to you that, you know, there are additional costs. You know, when you get your lawyer, you have to pay the lawyer fees. Those are part of that additional cost, part of that closing cost. Potentially, if you buy a property that requires property transfer tax, that is part of that. Your title insurance, that's also that. Your home insurance is also part of that additional closing costs right there. A lot of times, clients will look into their savings and says, "Wow, I have 100,000 saved up. That's my down payment, 100,000." But when they come time to close, well, guess what? They just used all their 100,000. Now they don't have the money to pay that property transfer tax, and they don't have the money to get their home insurance in place because that's required by the bank before we fund the money and the solicitor closes it. The solicitor can't be paid now. So that is very, very critical that you have an extra buffer of money. And prior to in the mortgage process, we will definitely ask that you show the bank as part of the underwritten process that you do have that 1.5% as part of your closing costs that you can cover. And it's an approximation because we don't dictate to you which lawyer and notary that you can use. We can recommend, Rob, you can definitely recommend, but the cost of everyone differs, right?
So thanks so much, Wayman, for giving us insights on how the mortgage process works, that you guys have mortgage products for newcomers, different kinds of products, right? And how mortgage works on the surface. And now if anyone wants to get more answers about the mortgages, you can call Wayman anytime, right? You can book an appointment with him, sit with him at a branch and talk to him about your mortgage needs, talk to him over the phone. He can qualify you and get you started. The other thing I've posted on the chat, if you look at on the chat, I've posted a buyer consultation meeting. So the next step from this point on is if you are serious about buying a home, you would book this meeting where I would go over your buying needs. I have about 20 to 30 questions. It's not about just one bedroom, how many bedrooms, how many bathrooms, which area, let's go look. It's a lot more than that. And I need to understand really in depth your needs, what's important to you and your family. And then based on that, we start looking for places for you that are on MLS, but also off MLS too. So we strive to get you the best property based on your needs. We believe in educating, and like all realtors have access to the same information, and everyone does their business different. And this is how we do our business. We believe in educating and guiding. And you will see when you work with us, you will see how we work. Look at our Google reviews, as Wayman mentioned. I totally forgot about that. But look at our reviews on what our clients are saying about our service, and that's what you want. You want guidance and education, and the process will be fine after that. But book this appointment because you will see that it'll be the best half an hour you spend with us. It's done at our office on 100th and 152nd. And for people who are watching this video on YouTube, there's a link below in the description, so you can book an appointment with me. And then eventually I'll connect you with Wayman as well. And Wayman's information is down there as well. So give us a call. We're here to help you guys. Any questions you have, we've been doing it for years, and we would love to share our knowledge and help you gain a property and help you gain financially when buying a place, right? We're just not like trying to sell you a place, but we will kind of structure it in a way where we will set up systems for you where you save money in taxes and get these grants and get these tax savings and apply certain other products to enhance your financial picture. All right, so I look forward to meeting you. There's no cost to this. It's free of charge. Even after this, if you decide you don't want to work with us, totally fine. But do give us a chance to sit with you and go over what we do. And if it works, it works. If it doesn't, totally fine. All right. My number is right there. Wayman's number is right there. Give us a call and we'll stick around for any questions. Please unmute
Thank you,
yourself.
everyone.
Please unmute yourself and do fire off any questions you may have.
Hi, Ravi and Wayman. Thanks so much for having the conversation today. I was attending with Rico, so that was Rico asking all the questions, but we did enjoy the webinar. So much to learn.
Awesome. Thank you so much. All right. And book that appointment with us, please. We would love to help you out with your buying needs. And we're always here to help. Okay.
We will do that. Okay.
Thank you. Thank you, Lynette.
Hey, Ravi, this is Sandeep. I'm kind
Hi,
of
Sandeep.
right now on work permit right now.
Yes.
So my horizon for, buying a home is kind of a dream for me in Canada.
Okay.
So for the horizon for me for buying a home is kind of 1.5 years away, because right now I am on a work permit.
Yes.
But I'm still kind of noob or kind of starter in this real estate market. I would like to go deep into how this is actually getting done. I've been watching a couple of videos on YouTube as well. So is it okay to book consultation for that? Because I don't want to rob your time, your valuable time from your calendar. Just let me know.
No, don't even feel that. So there's ways for newcomers to buy properties. Now, have you applied for your PR, and are you getting your PR in a certain time frame?
Yeah, I'm going to apply in September, but I do not know when I'll be getting the actual PR. It's because right now it has just started.
Okay.
And the scores are pretty high right now. So yeah.
Yeah. Okay, so there's ways around it. Like if we know that your PR would take a year, 2 years, you can buy like a pre-sale home that is being built. And if, for example, if we know that your home that you're getting your PR, let's say in 1 year's time, so by next year, September,
yeah,
you can buy something now that is like a pre-construction. That means the building's not up yet. You're just putting down a deposit, signing a contract that states that at completion date, which is later on, let's say 2025,
okay,
you will get this place at that price. So you basically look at the floor plan. There's lots of showrooms out there where we can walk through and kind of walk through the showrooms and pick out which property would be good for you. And then that's based on your needs, and then decide, does it make sense to buy that property? Because the way foreign buyer tax works, okay, because right now you're on your work permit, you would not you would have to pay that, and then once you apply for your PR and you get your PR, you can get that money refunded, and there's a process. There's a process to that, okay, and but 20% taxes is what you would have to pay on top of your purchase price. So if your property was worth, let's say 900,000, you'd pay 180,000 in taxes, right? Which you would get back, but who has that money to put down? So one of the things we recommend is buy a pre-sale where if you know you will get your PR in a year or year and a half, you buy something way out there where it completes in 2025, because yes, you bought the property now. You signed a contract now and you put the deposit down now, but the property will register under your name at completion, which is 2025. And that's when all the taxes are handled at that time. So by that time, if you get your PR, you're okay, right? And we've had we actually have customers right now who are completing on properties they bought like 2 years ago, right? And in between, they got their PR, which is great, and they're enjoying that lower price, right?
Yeah,
So
that makes sense.
And sorry to layer onto that too, as well as that, the one or another benefit too, as well, even though you're doing a pre-sale, you're locked in at today's price, and you're protecting you against, future
Kind of hedging. Got
runoff
it.
in that property itself. We can still at CIBC get you a fully underwritten mortgage on it up to 5 years in advance plus extension.
So this is a
So you don't.
brilliant, this is a brilliant product, Wayman, because I know like a lot of people plan families, and can you talk about that a bit more? Because this is awesome. This you
Yes,
must know.
of course. For sure, definitely. It really at times is that there's a lot of times when you go get a mortgage and you got a pre-sale. So now a lot of times people wait until they actually get that notice that says, hey, your pre-sale's almost completed. We're going to be doing a walkthrough on this day. We're now needing you to get finalized the rest of the funds on the specific date. And then they wait till that very last minute. Well, the beauty of being able to have a fully underwritten mortgage approved 4 years in advance, because we can't predict what's going to happen in the next 4 or 5 years. Who could have predicted COVID pandemic where people lost their income, right? And now imagine, guess what? Developers, they need to close, right? And they're going to be asking, and now you're going to go and try to obtain funding, potentially using that scenario to say, hey, with no income, how can you qualify? Well, in Canada, income is the basis of trying to get a mortgage. So that helps protect and potentially buffer, give you that peace of mind too as well, of that, you know what, the mortgage is done, locked away, as long as there's no latent change or latent defects or material change on the property itself, you know what, you're good to go. You're pretty much good to go.
So here's a question for you. I get a pre-sale. It completes in 2025. I get it approved with you, right? And let's say I change jobs right towards completion time because I'm getting a promotion. Hey, I'll take that job that pays me 50, 100,000 more, but I'm in that probation period now. Or let's say me and my wife decide to plan for family, and now she's on maternity, so she's not earning that much. But I have this approval sitting with me for this pre-sale during that time. How does the bank look at that?
Banks look at it as you're fully approved. We're waiting for when we actually go complete. That's it right there. There's no reason. It's whatever happened or changes right there. We're now having a fully approved mortgage right now. That's fully underwritten, and that's the beauty.
So this is really important to understand, because if your current situation allows you to buy something and get approved, even if your situation changes later on, you plan a family, you may take change jobs, you still get funded for that property, guys, right? And at that time, what if the rates come down, Wayman? Like, can I get the better rates, or do I have to pay that higher rate that I'm approved for now?
That's the other thing too, as well, is that rates are not something that's kind of locked into concrete, right? So if the rates go down, you're always we want to have the benefit with the clients to kind of help them kind of obtain what is in their best interest too as well. So it's going to be the better of the two right there, right? And to touch back on the point of, fully approved, fully underwritten right there, with banks, we have to be very cautious too as well. And I do want to throw it out there as a caveat too as well, is that with everything, there's always a legal disclaimer that with any mortgages, at any point in time, banks can always have it reviewed, or also have it not follow through if they choose to do so. There's always that in there, and that doesn't matter what. But do banks normally do that? They don't, right? It's because it's a branding. It's one of those things where it's fully underwritten. It's fully underwritten right there, right? But I do want everyone to be cautious to that. This is not something where we want to just spread around and kind of say, hey, this is what it is. But once it's fully underwritten, we don't want to, no need for us to know anything more right there, right? So.
And this is another reason why you should go with someone who knows how to do this properly, because if they don't do it properly, you can be in trouble at completion, right? So Wayman, I know we have sent you some clients where you have secured them with this mortgage product. And yeah, I would highly recommend, if you're doing that, Sandeep, that you qualify for that mortgage as well for that completion date, later completion date, right? And we can
Yeah.
find amazing deals right now as well. So
Yes,
we'll
you really
talk
want to
off-
have it not in conditional, but in, sorry to interrupt, but something that's fully underwritten right there, right? So that's
Yes.
going to be a big key.
Yes.
One
Any
last
other-
question about the mortgage itself. So when you said it's fully underwritten, my question will be the Smith maneuver, which I've been watching in the YouTube. Will that be also considered during this mortgage underwriting?
Sorry, I didn't, we can repeat that question again.
Okay, for Smith maneuver, it requires something inside the mortgage. So that needs to be done only when we apply for mortgage. So when an underwriting is taken by CIBC, will that be also considered?
Smith, are you talking about Smith maneuver?
Not specifically talking about Smith maneuver, but there is a precondition for Smith maneuver
Yes.
inside a mortgage.
Yes.
So will that option will be available even for this underwriting mortgages, which is
For on our side, we don't deal with the Smith kind of a maneuver on our side here. Those are things where I understand where you're looking at it to be able to, because you're doing it for the first as a first-time home buyer. You're not going to do you don't have an existing property where you're trying to get out of that or potentially have a clause to kind of get out of that the term that you're kind of settled in and not be able to have any prepayment costs on it, right?
Okay.
So at later date, like Smith maneuver is a way to shift money from your mortgage into your line of credit, right? That's what you're talking about.
Yeah.
Okay. So that can be set up later on at completion time, where if you are if you're paying down your mortgage, your line of credit starts increasing, and you can use this line of credit to invest into real estate, RRSPs, and now the interest you pay on here is a tax write-off. So it makes sense to pay your mortgage down fast and let the line of credit increase at the same time and use this money to buy investments. It must be investments. You cannot use that money to buy a car, a depreciating asset, because then you cannot use that as a tax write-off. Yeah.
Got it. Yeah. Thank you.
Yeah. So any other questions, Harsha or
hi Ravi. So I got one question for you.
Yes.
So let's say if we are buying a house and looking at my employment history, so how far is it has to be? Like how far I have to be with one employer?
Excellent question. So Wayman will be able to answer this.
So with that there is that it all depends on the employer themselves. So it can be from anywhere, and it's all dependent on your employment agreement right there, right? It can be anything from 3 to 6 months right there, but it's stated very clearly when you're onboarded on your employment contract or agreement itself. So once you're past that probation and you can obtain a letter of employment for that states that now you're a permanent employee of that company, then that's basically we're good to go. We can actually submit that.
So
okay,
here's,
so as to I understand, it's like it's just your employer that needs to say that okay, you're a permanent employee now. It doesn't have to be a certain period with that employer.
Well, sometimes I've kind of encountered where clients have been where they've actually been able to kind of already prove that that they're a keeper for that company, and they already have that conversation with their boss or supervisor and says, you know what, don't worry about the probation, you're a keeper, and they may be able to get that letter of employment earlier than having to wait. Because as long as your supervisor writes off on it and says this person's passed, they're the ones who determine. It's there's HR requirements right there, but the fact is that when your supervisor is the one who says, you know what, you're passing probation, then you're pretty much good to go and you can obtain that letter of employment right there.
Okay, perfect. That makes more sense. And one more question for you. So, if a couple buys a house as a partners, right? And the partnership will be considered their first home, or they can buy a first home separately as well.
So this is where it gets it's a the federal government really kind of looks at it and says that you're considered a first-time home buyer as long as you have not within the past 4 years lived in a home that was owned by either yourself or your spouse or common law, right there. But there's also a caveat that they kind of said that they're gonna say, hey, based on the based on sorry, based on their definition is that if as long as you haven't owned a home yourself, you're still deemed as a first-time home buyer. So it's kind of really gray. So as long as you have
Complicated.
yourself,
Mm-hmm.
you're not on title on any property in Canada, you're
Mm-hmm.
considered a first-time home buyer.
As soon as you go
Yeah.
on any title, you're not you've used up your first-time home buyer privilege, right?
Mm-hmm.
That's
Yeah.
my
Okay.
understanding. Yeah, yeah. We have
Okay. Thank you so much.
Yeah, no worries. Thanks for asking that. That's a great question. And just to say one more thing, like what if Muskan had like only one notice of assessment, let's say, and I know lots of mortgage reps ask for 2 years worth of notice of assessment. What if a person is a newcomer under the newcomer program? Is there any leeway on that, Wayman?
Yes, there is. Now, it's not something that's fully 100% guaranteed. Again, that comes back down to where when we talk about the selecting the mortgage advisor to help support you. That's understanding your situation, what you've done in the past. And obviously, what people coming over from overseas, newcomers to Canada, they may have been doctors in their home country, right? It's going to take some time for them to, if they plan on going back down this route, this medical route, to get recertified in Canada. So we have programs that kind of take that into the equation as well. So it's something definitely that there's opportunity to look at. 2 years, usually why some lenders want to look at 2 years is because most likely in your occupation, you have a lot of part-time income. And because part-time income is fluctuating income, they need a longer time frame to really gauge your average income over a certain period of time. All right. So that's why a lot of times lenders kind of ask for 2 years.
Yeah, so that leads me to another question. Like somebody has put this on the chat. Do you have to have a full-time status or casual? With a full-time status, will you do for mortgage what do you have to do for mortgage qualification?
Sorry, in terms of income, like what kind of income type?
Qualify for a mortgage. Like if you have like if you don't have, like if you have a full-time job or if you have a casual job, like how does mortgage work for that? It's based on income level, I would say, right?
It's based on income level. So if you have a casual job, that means that you have fluctuating income. Then that's where we would need a more historical timeline of your income over that time. Because you may work 1 week and you may make $2,000 in that 1 or 2 weeks, but then your next couple of weeks you're only making like $100, right?
Yes.
So then that's such a short time frame. It's not going to benefit you. So we want to look at, potentially, okay, if we stretch this out, is this going to be something where over that time frame, and that's why they normally take 2 years as the standard to say, hey, look, what is your overall income during that time frame, and then they kind of calculate your average per month. Right there.
And the second question is, I can answer this partially. Is I've used up my first-time home buyer privilege, but my husband hasn't. Would he still have the first-time home buyer privilege? Yes, he would. If you both wanted to buy a property together, you can put yourself as a 1% owner and put him as a 99% owner. This way, both of you become owners on title, and we can recommend a lawyer who can do this and set this up for you properly. And this way, both of you are on title, and then you can take advantage of that property transfer tax savings at the time of completion, and still take advantage of all the first-time homebuyer perks that a first-time homebuyer gets. All right, and I hope that has answered that question. Any other question, Harsha?
Yes, one more question is,
Yeah,
so I have joined this webinar through a friend and I didn't sign up for this. So, but I want to sign up for the data that you're going to provide. So will you be able to get my email through this, or should I provide it to you?
If you click on the link that I've provided on the chat, which says book a buyer consultation appointment, what we'll do is we'll give you a call, and then we'll sit with you and go over whatever questions you have catered to your needs, right? And give you all the information you need, right?
Yeah,
So,
that too. I've already signed up for that, I guess. But that data that you stated in the first place, that how it divides in the condo. Yeah.
okay. So do you know what? Here, I'll send you anyone who's on this call still and did not sign up. Okay, I would recommend just do me a favor. This way we have your information in one page. Click on this link and just sign up here. It says 20. Oh no, never mind. I'll actually. Do you know what? If you have gone onto the buyer consultation thing, and yeah, if you go into the buyer consultation link and you sign up on there, we will get your email, we will get your phone number, and we will add you to our email list as well, where you get data stats every month. Yes.
Yeah, thank you so much.
All right. Yeah. No worries. So don't worry about this. But do sign up for the buyer consultation meeting. I can emphasize on how much valuable information we'll be sharing in there to make you understand what the market is doing. Is this the right time to buy? And why is this the right time to buy or not the best time to buy? We'll cover all this with you one-on-one, right? So do sign up for that. Like I said, I've provided you that link. I'll just do it again because, there we go, the last link, okay? So sign up for that. If you have any questions, you have our number on the screen. Please take a note of that before this ends. And like I said, we would love to sit with you, help you out with your buying needs. When you work with us, you don't pay Wayman any fees. You don't pay me any fees. Don't worry about that at all. But you tap into our experience. You tap into our knowledge, and our job. When we do our job, when we educate you and we guide you, you'll see how this works and how it works for you, right? So I look forward to meeting you one day soon. And any questions, please give us a call. Our number is under this video. Go under description and check it out and give us a call. We would love to talk to you. And we'll stay here for another 1 minute and then we'll end this call.
Thank you. Thank you, everyone.
We'll have a video for this too. So we'll put it on YouTube and we'll fire it off to everyone. All right. Thanks, Wayman, for doing this.
No, thank you, Ravi. No, it's great. This was a lot of fun.
It is. I think next time we should do this in an interview way, like sit and just chit chat about the economy.
I like that idea.
About
we'll talk about it. I'll call you in a bit after we finish here.
Yeah. No, for sure. So I think with this we'll end this call. Thank you guys, Vinayak and Harpreet. Thanks so much. And everyone and anyone who missed this, you know what? We'll send you a video, and hopefully you gain something out of this. And we look forward to meeting you. Totally. All right. Thank you so much.
Likewise.
Have a good day. Thank you, guys. Bye.
Thank you. Thank you, everyone.
Bye.